Hello, Warriors. How's everyone doing today? Mike Bergman, how are you? Sinatra, hello. Patrick, great to have you here. Thank you for your appreciation. And Bran, how's it going? Team, how are you? Another day. Let's collect some pips, or at least prevent
Hey, Dale.
giving stuff back. Hey, Ryan, how are you?
All good, mate. You?
Pretty good. I wanted to start with the GDX. Okay, for people that have been following, you know what I'm doing in minors. We're approaching the 61.8 level. This was a pretty good wave, and I think it'll take a new low in gold. Gold's up a bit today, maybe back towards 1810, unless they get a turn here. And you know, the XAU, you know, GDX is really what I'm using for a guideline for entering other minors. And I thought I'd just share one that I think is going to be, at least now, the way I have it imagined. And it's called Fortuna Mines, which actually doubled in price on the last wave in silver. Let's take a look at it daily. So we went from $2 to over 4. All right. And I actually didn't play this well. I got out right before the breakout. Other miners that I had, you know, they didn't perform like Fortuna did. This is another one I'm looking to buy. But I want to show you the Fortuna because it could be, you know, just something that could be a long-term play. So anyway, I'm looking for this area here in the coming days, weeks. I'm wrong under the low. But the fact that it doubled on this first wave, maybe there's over $3 from the next. And the reason I really like it is when you go to the weekly, you could see that, you know, that was a range. We tested the bottom of the range, but the real reason is the monthly. So, you know, if you're a silver bull and you're looking for, you know, $38 silver, $50 silver. The monthly is a rectangle. Okay, so if I could buy this right and this low holds, and the next wave could take it maybe to 6, but what I'm thinking is eventually this rectangle is tested to the upside, and just like you would get out of the way under 2, that would be another breakout. And it's almost I don't know, $7 or so. So you tack that on, it gives you about $16, $17. And that'll take, you know, a big bull move in silver. But the monthly is attractive. It looks incomplete. There's 2 drives here. So, you know, I think eventually we're going to make our way up to the top of the range, just like we tried the bottom of the range 3 times, that we'll try the top of the range. And then if we break out, it's a big trade. So I thought I'd share that with you guys.
Is that one called a pension trade, Dale?
I would call it, you know, for me, it would be like eternity, but it could be like a 2-year hold.
Yeah, stick it in your bottom drawer.
Yeah,
maybe earn some dividends on the way.
Yeah, don't watch it. You know, maybe just keep an eye on silver. Protect yourself on the downside, and you know, and keep adding every time it does something right. It could be one of those I think I used to call them campaign trades.
Yeah, we call them pension trades over here. You put it in and you worry about it when you retire.
Okay, well, you know, that's different time frames for different people. Right, buddy?
Yeah.
And anyway, I already have my retirement planned. I don't know if you do yet, Ryan, but I'm planning my retirement will consist of slumping over my keyboard.
With a beer in your hand.
Hey, who's ever been to a retirement dinner for a trader? Anyone? Who got a gold watch?
There's more divorce dinners than retirement dinners.
Anyway, did you know, get a gold watch? I'm a little bit, want to get yours and Kman's views on, what's happening here in things like the euro. I have this wedge here, and we're diverging. So either we're gonna get a throw over, because I know a lot of people are talking 104.5, but that doesn't look bad. You have to admit, it's hard to short here with these divergences happening, and cable, looks a little weaker, but way off the lows. I mean, cable would have to do this, which I still, think it's possible. What's your
That's
take
an
on?
afternoon. You can do that in an afternoon.
Yeah, and the Dixie, holding 104. It's hard to want to fade the dollar here. If you do it, I guess, you have a little divergence here. And the yen looks like it's going to make a third drive. You have anything up at, someone I follow has a target zone of 36.80 in US dollar yen.
There's a big confluence zone up there.
Okay.
You've got the 200-day moving average 136.98.
Oh yeah, here it is. Okay.
You've got the 100 137.24, and you've got the top of the cloud sitting around about 136.95, 137, and you've got that 38.2 fib of the November or the October drop from the big highs at 136.60. So yeah, around the area, high 136s, low 137s, big zone.
Okay, so that's an area to watch. We're kind of in no man's land. Do you buy it for, that is 180 pips from here.
Yeah,
and
but we got that. We got the two big risk events today. We got Japanese CPI, and then the UEDA confirmation hearing early in or late in the Japanese day tomorrow. So
don't give away your blog post.
we could be at 130 or 140. It's one of those.
It's all right. It's
already.
We could be at 137, 140 by then.
130 or 140, depends on which way it goes.
I see. Okay. All right. Anyway,
I'm gonna throw that blog post in the chat box right now so everybody can read it, because this is a big one, right?
Yeah.
The report was probably already copied anyway.
What's that?
The blog was probably.
I got it. Yeah. I'm not gonna. You know what? I'm just gonna be quiet. I'm gonna be quiet. Sorry, Dale. You guys continue your conversation. I'll be back.
All right. Risk trying to bounce here. I don't know. I hear myself saying I don't know, so I'm just going to wait for levels. And just one more point, like the levels I'm looking for on some of these miners and GDX and things that I have more conviction about. Let me coach you on something. Just like you have to be patient to wait for your levels, it's just as important to be patient in putting on your positions. So you don't go all in at a number. Okay, I don't. You notice Stell, how he trades. He pieces it in, he scales in. So even though we might be at 61.8 in the GDX in a couple days, I'm not putting everything on. I'll put maybe a third on and then see what happens. So don't go all in. Be patient about your sizing. You could always build it, right? Harder to trim it than to build it. Okay, so just something else I wanted to share. It took me a lifetime to get it, so I hope it doesn't take you guys a lifetime. All right. Kman, how are you, buddy?
Hey, how are you, Dale? Hello, everybody.
Okay, so you're probably watching, getting ready for the news events here in the yen as well.
Yeah, it's gonna be a mover. Well, the levels were already said. Ryan even stole my Shimoku cloud.
Well, you know what you should have done? Do you remember the Stone song? Hey, you, get off of my cloud.
Yeah,
that's
exactly.
what I would. Huh? Yeah, I could
Exactly.
tell Ryan, hey, Ryan, hey,
Yeah.
you get off of
Hey,
my cloud. Don't hang
Exactly.
around with the.
there's plenty of clouds in the UK to go around, Kay. You know that.
Yeah, there is in cloudy California
Yeah.
too. So I've never had a winter like this. Are you sure that we're not entering a new ice age instead of global warming?
Possible.
Because it's
No, but
freezing.
I think globally on the dollar, we are at interesting levels. You showed the euro dollar around 106 there. There's also the Aussie just into 68. We have a big level on the Kiwi into 62. So
Yeah.
now it's going to depend whether those US yields wants to push through or not. Otherwise, we could be either a bit rangy or starting a correction inside the correction or so. So I don't have much running, to be honest, right now. I'm I'm trying to be patient. I did, for those who are interested and those in the room who know, I did cut off a lot of my Euromix short on this dip. I was already looking at this this zone. I don't really know about dollar mix because dollar mix looks like the 1850s being broken is still oriented south. But I think there may be a little bit of a bounce in mix crosses also.
Yeah.
Also because the CPI came in a bit on the weak side about an hour ago or so. So that one I took a lot of, been a fairly decent ride. So it's more about managing expectations now. Yes, you were showing silver. I'm going to get interested if we get below 21. I have a firm bid in 20.5, but perhaps it's a little low right now just to start to rebuild on my long-term longs. And then I'm probably going to rebuild all the way down to, I don't know, 17, 18s, whatever. But I want to start to build up again on the next dip, perhaps in with a spike on the US yields, which is possible. I mean, we had the FOMC yesterday. We had the data then. We had actually pretty interesting comment by Williams last night for us, yesterday evening for you, saying that they are absolutely what did he say exactly? Absolutely attached, or the Fed absolutely wants to defend the 2% inflation goal. So
to the upside or to the downside?
2% inflation.
Yeah, I mean, do they want to defend it as a floor?
Possible, mate. It looks like a decent floor right now.
Yeah.
No, but I mean that in response to what some people were starting to say, that perhaps they need to adjust it to the top side, and but he fought back. He found it necessary to fight back against it. So that also makes me.
I think that if ever they
on dips right now.
I think that if ever they decide to choose to change the inflation target, that's going to be the end of it. Because once they do that, there is no inflation target anymore, ever, right? If you keep adjusting inflation targeting to the upside, then in my opinion, you've lost any remaining credibility as an institution that defends what they call price stability, which of course isn't even price stability, right? Price stability means stable prices. Stable prices, mathematically speaking, means prices that never change. So even by targeting 2% inflation, in a sense, their target is changing prices, not stable prices. But if they start even moving the goalposts whenever it's convenient to higher levels, I think that then there is no function anymore that has to do with price stability, right? So I think they will never do it, basically. That's my point.
And that was that, folks. All right. Good morning, Steve.
Good morning.
Hey, Dale, are you there? Did we lose you? Okay,
No,
we
I
didn't even hear a rebuttal or comments. So just making sure everybody's okay. All right.
Yeah, everyone's okay.
I'll take
So,
over.
Blake,
I'll
all right.
jump in.
All right, jump
all right.
in.
How's
You're
everybody
high
doing? And good morning. And I'm sorry. I
Some
was just
dead air, huh?
I mean, I love dead air. There's nothing better than dead air. Like when it goes radio silent. It's like you can't ask for anything better than that when you have a show.
We were meditating, Blake. We were meditating.
I think you obviously were. All right, that's what happens here on the F.A.C.E experience, folks. So, hey, let's talk a little bit about what's happening with the markets, because it's kind of quiet. We have the BOJ tonight. Ryan, I know you don't want to give away everything about your blog post, but can you tell us, like, and you what?
You posted it up.
Well, I know, but people have to read it first. I mean, I don't want to give away everything, but what are you? How are you going to play tonight? I know everybody should go and read, but let's cut the chase here. How should we play it? Like, how are you going to play it?
Well, you can look at, there's 100 different permutations if CPI comes in up, down, higher than expected, lower than expected, and then we've got the unknown in what you either might say this thing. So there's always you can think of 100 different trades, 100 different permutations. I look at what is potentially likely, and I look at what's low risk. And for me, low risk is being long dollar yen at the moment. We know it's bullish. We know yields are up from the US side, more hawkish. Is Ueda likely to throw the towel in on easy policy in his first ever main appearance? Very, very doubtful. He could mutter some words, but he's not going to say next week we're going to hike rates 50 pips. So you've got to think he's going to play it cautiously, very cautiously, which naturally means yen gets sold and yen pairs go higher. So for me, if we get a good number on the CPI, that'll give dollar yen potentially a dip. And I'm looking to maybe buy that dip if it's a decent amount, and just run it into Ueda. I'll have to consider what I'm doing with my core shorts. From here down to 131s, I might have to fold those in. But at least for the short term, I think if the stars align, long dollar yen on a strong CPI is the way to be.
All right. Little heads up. We're actually getting some comments from the G20 meeting. G7 finance ministers, governors say reaffirm exchange rate commitments. Japan's finance minister Suzuki says G7 confirmed unwavering commitment to support for Ukraine. Japanese finance minister says close cooperation with India will continue. So a little bit of headlines.
Kuroda will continue monetary policy easing.
Yeah, he'll continue for the next 2 weeks, week and a half. All right. So here's a chart of the Japanese inflation, and this is what Ryan's talking about. That if this continues to tick higher, we could see a little slip in dollar yen. But as Ryan, as you're pointing out, you want to be there, and I want to be there to buy the dip. But you know what? I want to ask where you're selling it, because I said this in the trade-off yesterday. I said it in the week ahead video over the weekend. I am a seller on a move to like 136.5. I mean, I've been talking about this for the last couple of weeks. I'm just kind of patiently waiting. Kman, what are you thinking here?
I think Ueda has the potential to move it a lot. Depending on what he says. My base case is that he's probably going to kind of confirm that they are trying to use this window to move away from the strict straitjacket that they are in. But then, being who he is, I don't know whether he's going to tell the government that they can that they will have to pay much higher rates for their all their stimulus packages that they have put in place. So I'm really cautious here. If he, and I don't think he will do, but if he just mentions that Kuroda was right and then he's going to continue on the same path, dollar yen is trading 140, right? I don't think. I think he's going to be very cautious and but going to, he should, because it's the official hearing, so he should tell us that they are going to gradually move away. How gradual is going to be the kicker of the whole thing.
Okay, yeah, and you know, I know I was just discussing this last night, and I know we've talked a little bit about this, but it's interesting. You know, people will say whatever they need to say to secure the spot they're looking for. Once they're put into that position, their actions are going to be a little different, and that's why we do have to be careful of the words. As you point out, Kman, he could very easily say, you know, I'm going to follow in the footsteps of Kuroda, and that would put, you know, the dollar yen much higher really fast. But I would also fade that, you know.
We saw that with Powell, right?
Yeah, I mean, you see it with everybody. I mean, it doesn't matter.
You remember Powell was playing the hawk before he got elected. Then he got elected, and Trump started pushing him around, and he was like super dovish. And you know, then he turned to hawk again.
Right. I mean, you know, it's the pressures that you feel in a political arena like that, I'm sure, are pretty high. I mean, I'd venture to guess. So yeah, I mean, that I believe is definitely the risk. So thank you for your comments, Kman, Ryan, Steve. I want to talk really quick about a couple other things really fast. We have the S&P, and the S&P has had a decent pullback. You know, we found support at the 50 DMA. You can see like the 50 DMA, you know, 50% retracement right here, channel support. Do you guys sell risk into this? And by the way, this trend line here, Benedict actually in our chat room. If you guys don't know what our chat room looks like, this is our chat room. You want to see like the most active community. Okay, I'll just show you when I get up, which was about an hour and a half ago. You know, somewhere around, I don't know where I'm at. Somewhere around here, where I said good morning. This is on one of the slowest trading mornings that I've seen yet. This is just all the chatting and charts and chatting and more chatting and more chatting and charts and that's just in the general chat room. So you can see how active this community is. But the reason why I point that out is because Benedict was in our chat room yesterday, and he's like, "Hey Blake, do you see that ascending trend line? We're finding support there." And I'm like, "Oh my gosh, you know, that's I wasn't even looking at this trend line. Like this trend line wasn't there until whoops." now I've got two of them. It wasn't even there until he told me about it yesterday, and I'm like, oh yeah, you know, there's an ascending trend line, you know, thanks. And that's what our community is all about, is finding these levels of support. And we've seen a pretty big bounce from there. I mean, you've seen that's like a 40-50 S&P point bounce from that level. And so I think we have to respect it. So what do you guys think here? I mean, do you sell risk at these levels, or are you gonna play it on the long side? What are you thinking, Dale?
A trend line's destiny is to be broken.
This is a good point. Yeah, I can go with that. But do you sell it now or later now?
I'm thinking, you know, 4,100. Last week was when I had the vibe. After a big move like this, it's tougher. But I think it, you know, up around 4,100. If it got up there, you could sell it. I think they'll take out. I think that will go to your moving average, or your down, could test a downtrend line again. I'm looking for about 39.20, and I think that'll be a more important area than what we're holding from yesterday.
I agree with that. I agree that the 200-day moving average, the previous channel, broken previous channel, and also that trend line is going to be very important. 618 retracement down here around 3,900. As I stated last night on the trade-off show, I'm looking to sell risk on rallies up towards 40.50, which is just not too far away from where we're at right now. But you want to buy dips into 3,900. Then I think that's the play for right now. But that's how I'm going to do it. But I'm kind of fishing around. Ryan, what do you think here? Do you think risk is going to be well supported, or do you think the market's just kind of brushing off some of the bigger risks in the market, like higher rates, higher yields? Putin on a war path? I mean, I don't know. What are your thoughts here?
Yeah, we've been talking about this on the Flow Show this week. There's been an uplift in the the Putin comments, Russia comments, China comments, towards conflicts and stuff, and the market doesn't seem to be taking that much notice of it. So I think we might be one headline away for a bit of a washout. But levels are levels, aren't they? And
yeah.
Everyone was talking about that 4,000. It maybe tried to shake a few out by dipping under. But it's holding up again. It's back above. As you guys like to say, clean out the weak hands before making a move up. Trade the range, 40s, 42s. That's where you got to look at it until we get something significant changing that's going to drive us into a proper direction.
Yeah. Very, very, very good. Kman, do you have any thoughts about risk in general? Like, you're just overarching theme here.
Still very, very uneven. If you look at stuff, the usual risk currencies, it's still looking pretty okay for risk because yen is a different animal, of course, but then Swiss is weakening just a little bit again now against euro, which is usually a little risk positive. The rest is it's very uneven. I think if you look at pure risk, like MEX, for instance, it's come a long way. I'd be just a tad careful right now. Getting carried away on risk. I think for as long as US yields also don't start to reverse, there is still going to be this weight hanging over the S&P or perhaps the Nasdaq or so. So I'm not extremely bullish on those things, and I'd rather wait for rallies to relief rallies to sell into it again, I reckon, because I think the yields are not completely done yet.
Yeah, I mean, yields are. I mean, that's the Achilles heel. It's going to end up being the Achilles heel of the market, and I think you're right in identifying that is really the biggest risk this market faces. People have come under the assumption that the Fed and other central banks are always going to be here to save the markets. That's what we've been trained over the last several, decade plus, right? Last 13, 14 years. Yeah, I mean, it's Pavlovian at this point. I mean, I feed my dogs twice a day. I can't leave my big, 80-pound, dog, like, I can't leave food out. That dog would be 160 pounds, if I did it within like 2 weeks. So I have to feed the dog every twice a day, and twice a day it knows exactly when I'm going to feed it. And and she nudges up against my arm. She's slobbering all over the place. And if I don't feed her, she's going to have an attack, a panic attack, like literally. And the markets are very similar to that. Very Pavlovian at this point, right? So I don't know. I think, guys, we need to take that into consideration. One of the reasons why risk lifts at this point is because we are like in that anticipation method or point where we're like, oh, we need our food, like we need it soon, and we're drooling, we're slobbering, we're pushing the food bowl up towards our owner, which happens to be the Fed, FYI, and we're not being fed at this point. So it's going to be interesting the fit that we might have if we don't get fed soon with lower rates, right? And I think I just used a whole analogy that I didn't mean to do. I'm going to pull up the dollar index really quick. We got less than a minute. We don't have Stelios here yammering at me. I'm going to put up the dollar yen since our focus is on the dollar yen, and I'm going to pull up the data that we have GDP data coming out. You guys have any feelings about GDP, or is it just going to be a past? Gosh dang.
But we're past. It's all old stuff, revisions and whatnot.
I was trying to.
But look for any decent variations. If there's big variation in numbers, we could get a bit of a move.
Yeah, that's the thing about data, right? Any blowouts one direction or the other, any outsized move can give us an outsized response. So Notice the Kiwi's hitting lows on the session right now. We've got the dollar MEX approaching highs. So watch this data. If it comes in healthy, strong, risk isn't going to like it. So let's see. You guys see it?
It's off 2.7% for GDP.
Okay.
Last.
So, you know, the initial reaction with equities, you saw the initial reaction was a higher with that, and jobless claims are coming in better than expected too. So that I think is actually, believe it or not, the more important number.
Yeah,
and same with this GDP price index. See those two beats right there?
Yeah,
that's the stock market not liking that. I mean, because GDP is backward looking any which way you look at it, but the price pressures aren't coming off, because people can look at GDP and go, oh, well, you know, the data is a little soft, so we're gonna buy it. But, you know, look at the data that's incoming. That wage price index or the GDP price index is not a good looking number for the market.
The other numbers are a bit soft as well. Sales soft, consumer spending soft. I'm not sure why dollar's rallying so much on this, but the market has other ideas.
Yeah, market does. Market always has other ideas. And really quick, I'm going to leave you guys with this before we bring in. Is Harold here, Dale?
Yes.
Oh, hey, good morning, Harold. Good to have you here. I just want to leave our traders with one last idea, really quick. You know, dollar Mexican peso. Kman was talking about the Euro Mex. I just aggressively bought it down here. The reason why we're near channel support. I'm not such a big buyer of risk up at these levels, as you know, as I've been mentioning, but I think we're at 127% extension. We get above 1850. I know, Ryan, you're selling into 1850. If we get up there and respect it, I'll be selling into 1850 as well, just taking some profits intraday. However, if we get above that, I'll be even getting more aggressive on the long side, especially now that we're past the triple rollover for us retail traders on holding dollar MEX. So I don't mind holding it for a couple of days here. All right, I'm gonna leaving you guys with that freebie. I want to thank a whole team for being here, and Dale, have a great interview with Mr. Malmgren. He's so great to have here, you guys.
Thank you, Blake. Harold, welcome back to F.A.C.E. How are you, my friend?
Oh, great. How are you?
Good. You want to show your video? You want to go on camera, or you want to be incognito?
Yeah, sure. I got it.
All right.
Can you see me now? Yeah.
Not yet.
Well, I hit the button.
Okay. Huh. Okay. Ask to start video. Try it now.
Yeah. You got me?
Yeah. Anyway, so I guess we'll skip it for now, Harold, because what you have to say is more important than, you know, what you and I look like anyway. And, here's a here's a look at Harold's institute, and we have some important things to talk about. I believe you want to start with China, and you're skeptical about this reopening in China, that it's not going to have the kind of bang for the global economy that a lot of people were considering. Now I see you, Harold. Okay, so yeah, so why is it going to not be robust? Is it that COVID, or just their economy is in worse shape than it was? And recently, China stocks had a great run late last year and into January, and they're under some pressure. So tell us what you think is happening in China besides balloons.
Well, Dale, I've been watching a lot of this far more actively the last couple of months. I formed a new company with a fellow named Nick Linsman.
Yes.
And Nick is a former big money maker for Brevin Howard and for Solomon and Febro Brothers and a number of other big traders. So the combination of my network and his familiarity with virtually everything that's tradable, the reason we did it is that some very big money operations in New York said, "Hey, Hal, would you come out of semi-retirement and run us a serious upscale premium service to advise us on the turmoil that we see?" So I've been following everything in great detail.
Okay. Why don't we start with start with China, and a lot of what they do is reflected in what happens with their currency. It's a managed currency. We've had a pretty good run in both directions. What's China trying to accomplish here with the yuan, besides de-dollarization, which everyone knows that's their main
I'm going to bring you up to date, because changes in Chinese policy were made 2 days ago by Xi personally. Number one, the new dictum from Xi himself in writing was that we're going to give much less focus on trade. We expect the trade to be very soft. We're not going to have high growth in trade. So we're going to have to find growth domestically. And we are going to shift away from the policies we've been doing, and we are now going to focus on raising domestic consumption by moving around wealth to the people. Now, this is pretty important. And this was all in writing, given the night and day 2.5 days ago. But I don't think any financial news covered this new statement. The Chinese call it Qishi, Qishi. It's where the big policy announcements are made. Now, what I expect is trade will not rebound. The demand internationally isn't there. New orders coming into China, Taiwan, South Korea, Japan are just negligible. There is no momentum for manufacturers' trade. Of course, there's a momentum for commodities, but so we're looking at China as having to get on without that engine of growth that we're so used to for many years. And so the big question is, are they going to be able to have any growth at all if they're doing everything on the basis of domestic demand stimulation?
Is this how they do it? Harold, look at my screen. Is this how they do it? They're destroying their ghost cities, so they're going to take them down and build them up again?
Yeah, that'll be one of the steps.
I mean, do you believe this is happening? I mean, it could be photoshopped. I got sent this tweet that they are, demolishing their ghost cities.
Yeah,
you know what bothers me about that? Where the heck are all the ghosts going to live?
Yeah. Well,
anyway.
Well, now, to think about what this means, I don't expect Japan's exports to be strong. South Korea is in terrible shape. Their export outlook is really bad. The only country that has only major exporter that has some momentum still is Germany, and that's the specific deals between Germany and China to move some of German production to China, especially in chemicals.
Okay.
But it's a new world now.
Okay, how does this affect us? The fact that the rest of the world, that they're not focusing on trade, they're going to try and they've been trying to develop this domestic demand for a long time. Does the population have money, or are they still underwater on all of their real estate investments, which is what most of the population did?
The population has money, but they're very unwilling to commit it. They don't have any confidence in Xi. So
Okay.
what I think you're going to see for a while, passive response. Now, let me move. We can come back to this, but I expect China to barely grow, or maybe not grow this year and next year and the year after. In fact, the Chinese century is now over. I mean, they got to here, but I think now China has peaked. It's not coming back. We're going to see, because of demographics, China
Okay.
is going to be shrinking year
Okay.
by year. And so
Does that put us closer to war because of that? If they can't get it out, go
big
ahead.
unknown, because right now they're desperate to bring more foreign investment in. They're short of money, especially short of dollars. So I know a lot of commentators say they hate the dollar, but in fact, they need dollars to move the economy.
Okay.
And so that's why they've got the invitation out to Blackstone and KKR and everybody else. Please come, please invest. You're welcome. It's very temporary. And me, I wouldn't put any money in China right now. I'm very close with the
We have a little internet issue. I don't know if it's me or I believe it's Harold.
It's
Any
not you,
comment?
Dale.
Okay. Yeah, he's frozen. Are you back, Harold? Okay.
yeah, it seems to be now.
Okay.
GIC is, almost $800 billion sovereign wealth fund with a very big involvement with China, because it's Singapore. A lot of the people in Singapore are Chinese.
Right.
And my friend, the chief investment officer, just announced that they are rolling back their investments in China right now. Now, the rest of the world didn't really realize what that meant, but this is the #1 expert on China. And if they're becoming cautious, I'm sure they're telling everybody in Wall Street, time to be very cautious. And they are telling the big pension funds, maybe you better start having a new look at your portfolios, because if you have a lot of stuff in China, you may want to be backing out of it. So there's something new going on that you don't see in the press, but there is bipartisan support in the Senate, both parties. We have
They seem to always agree about China.
Yeah, that's the point. You got
Yeah.
people in the Senate, they can't agree on anything, and all of a sudden they're looking at each other and say, well, at least we can agree on China.
Right.
And so
That's it.
the pressure is to put in a review system for outgoing investment from the US to China. In other words, a reverse of the existing system where we control imports and purchases. But this is not a small thing. The White House is working on an executive order. This is probably on a timetable of 5 or 6, 7 weeks. And the Chinese know it. So they're freaked out that we may be coming to a point where we have a real break in the flow of investment with China. So China, if you're an investor, I have to say right now, China is not investable until they get through whatever they're going to do about domestic consumption. It looks really troublesome. And
well, when nations' economies are in trouble, and it's like the tail wagging the dog, right, Harold? I mean, they've had designs on Taiwan. They really didn't want to maybe not risk it at a time when they were generating that kind of growth. But now maybe they need to draw the public's attention away from what's happening economically and do that through nationalistic actions like going for Taiwan. Are they going to make a move here?
I don't think so. I think what's happened is the technology sector inside China is quietly pounding on Xi and the Politburo.
Okay.
We cannot afford a break with the U.S. right now. We're not ready. If we're cut off from all investment in technology with the U.S., we're we're not yet equals. And we'll be in trouble. So I mean, there'll be huge pressure on the leadership. Don't mess up the U.S.-China working relationship. Turn around and find a way to get along better. So we'll see what happens. But you know, Xi Jinping has made several big turns. I mean, no one expected him to completely change the lockdown policy all at once.
True. Good point.
So he's capable of big change for survival. I mean, I think what's not seen is there's a huge amount of public unrest. Now it's taking the form of what's called the white paper revolution. So as not to get arrested, demonstrators all over China are simply holding up a piece of unprinted paper. And when they do this, crowds gather in the hundreds and thousands and tens of thousands, and in fact, in many cities, hundreds of thousands. Nothing is said that is illegal. Piece of paper without any words on it. What it's demonstrating is we're unhappy with everything you're doing. And that is now pretty widespread. We don't see it because the Chinese don't want that broadcast. So there's a lot of turmoil going on inside. And I don't know whether she can get domestic growth from just beefing up consumers. Now, let me shift to Japan because it's a little bit part of the puzzle. The choice of Ueda for the Bank of Japan was handled very secretly in Japan. Now, I've been dealing with Japan for more than 50 years.
Okay.
So let's say I've been pretty much inside this. The final decision of the prime minister personally, without consulting his people, was to choose Ueda, and that was on the basis of his top people talking on the phone with Powell and with Yellen. Ueda is an MIT graduate, but he's, just like Bernanke, and quite a number of, there are innumerable MIT grads. They're all buddies. They're all alumni. He was chosen because he's a buddy of several of the central bankers around the world. And what the prime minister wants is that we're going to have to change policy, but let's do it in a way that doesn't upset the balance worldwide. Because if we make a big shift in our yield curve control, then there'll be an avalanche of repatriation. Money will come home to Japan.
Yeah.
And that will completely destabilize the bond markets of Europe and the US.
That's why they changed policy to begin with last year, was because the JGB market had become, it really wasn't trading well. It wasn't operating. They were having problems with that.
Well, they
dysfunctional it became.
Ueda is going to be behind the curtain talking all the time to the ECB and the Fed and Treasury. He knows a lot of the people. He speaks good English. He's going to be the first time Japan has had that kind of a BOJ governor. So keep an eye on it. This is much more sophisticated and he's very mindful of not creating an avalanche of repatriation that would completely throw out the world bond markets.
Okay. So he would want the yen not to appreciate. He'd like to see some stable yen, where around this 135, 135 range.
Well, he needs to get the interest rate up a little bit more, but he doesn't want to do it so high that money is encouraged to just leave the U.S. and come to Japan. You know, it's borderline what that trade-off is, because it's not just the exchange rate, but the cost of hedging. And so it's a very delicate time. But that's, let's say, under control, because you got somebody who's talking to our people in the U.S. and the
so we've expanded the country club to finally include Japan.
Yeah,
and he could come over and sing Kumbaya with Bernanke and Yellen, and they could all gather around the campfire. And now Powell, like Powell did. Okay. All right. So more central planning in line with U.S. aims. You know, we have, I'd like, if you don't mind, I think we've covered China and a little bit on the central banking side of Japan, but you sent me a piece, Harold, that no one's talking about. Everyone's talking about how well prepared our major banks are for a recession or a credit problem. And you have been writing about the shadow banking system.
Yes.
And so, I mean, why don't you tell us what it is as far as magnitude in what's going on in the shadows as far as size compared to what's happening in the daylight at Wells Fargo, etc.
Dale, you know very well that when we had this financial crisis 2008-9, the problem was not the banks directly, it was
derivatives,
not derivatives and non-bank lending. You know, there was just, and the non-bank lenders, they didn't have reserves. So when things began to get rocky, I mean, they immediately were near insolvency. So everything began to, and once that happened, then our banks that had been lending to the non-bank lenders, they had to, you know, make calls, you know, send some money back. You're at risk. So
they called in the loans. Yeah, called in loans. Okay.
Yeah. Now, at that time, non-bank lending was maybe 60%. Well, actually, it was about 50% of total lending going on. But today, non-bank lending is about 50% bigger than the total of all banks in the world.
So it's 150%.
Yeah, and
sounds
they
like
have
GDP.
They're unregulated. They don't have, none of them have adequate reserves, and you know, it's big and small. I mean,
is it companies like SoFi, Harold? Companies like SoFi, and can you name a few?
Yeah, well, I would put at the top of the list Blackstone, KKR.
Okay, yeah.
And and then for example, Sequoia silently has a large number of non-bank arrangements with projects in China, and that may get you know, a sour look from our government. We're helping the Chinese too much. It's far more wide. This is much bigger than everybody thinks. So I foresee some trouble, some within the next few months, and this is going to cause a credit crunch, because these non-bank lenders are going to be unable to go to the markets for overnight borrowing. We're gonna have a liquidity crisis, a dollar shortage. So everybody's forecast is about everything stays as it was, but I don't think that's going to happen. I think somewhere during the course of the middle of the year, we're going to have an event like we had in 2008, and it's going to catch everybody by surprise. So the work that I'm doing now with some very big financial institutions in the U.S. is warning that this may be a mammoth problem, and don't be caught with
your pants down
exposure. So, and
all right. So where should people hide going into a crisis like this? Cash in your floor safe. Do you think there's going to be bail-ins if this happens, Harold?
I don't know what the Fed will do. The last time there was a problem with bad corporate loans, not so long ago, the Fed had a choice. They could have set up a resolution trust and pulled out the bad non-bank companies, but they didn't. They just bought all corporate debt indiscriminately. I think
well, people aren't in the mood to bail out banks, but they don't realize if we don't bail out the banks like we did last time, we're going to be the ones that are bailed in, our deposits in our banks, right?
That's right. So we've got a shock coming this year, a big one. Now, how will that work out in the currencies? The dollar is going to be much stronger if there's turbulence, because it's the only safe place for the Europeans and the Asians. I think we're going to see the dollar slowly edging back up. Doxy is not going to stay where it is. It's going to edge up because of this underlying huge uncertainty. And the renminbi is going to slowly weaken and get much weaker. But people will worry, is that going to mean that they'll sell us more stuff cheap? And the answer is there's no demand for manufactured trade.
Here in the U.S., there's no demand. We already
no demand anywhere in the world. I mean, there's just, if you look at the top exporters of the world, Taiwan, South Korea, Japan, China, and Germany, they're all suffering no orders. And everybody looks at other data, but I'm always looking at new orders because it tells you the next 3 months or next 6 months. And the demand for manufactured trade is negligible.
Okay, so that must mean even though they're painting the U.S. consumer with record debt still resilient, that we're going to have a demand problem here in the U.S. that has to come into the markets. Yes. At the same time, we're having a credit event. That's a pretty toxic cocktail.
Yep. And the size, everybody should think about the size of the non-bank lending is now way bigger than the total of the banks.
Yeah, so, 1.5 times, you're telling me.
Yeah, that's right.
All right. Well, I tell you what, Harold, I mean, a great time for you to be with us so that we can think about this and take some steps to not be caught with all the cattle going into the slaughterhouse. And I also want to wish you, a lot of success with your new venture that you have going on with Nick and, your current one right here. It's where you could follow.
Yeah, well, I was surprised, but some of the biggest houses have come to us, names that you'd be surprised, but some of the biggest public pensions in the U.S. I mean, I won't say which one, but this week, one of the very biggest public pensions got in touch with us and said, we want your advice on reviewing the entire portfolio.
Okay, well, aren't pensions aren't pensions really at risk because they had to go out on the risk curve with zero rates, and that
Yeah.
they're stuck with a lot of bad paper in the bond market, and that they may be the pension guarantee fund is not big enough? And didn't Biden just offer or give $500 million to the Teamsters to shore up their pension? Huh? So we're gonna have a pension crisis everywhere.
Yeah, I think that's right. And a lot of those pensions, particularly on the West Coast, they're deeply involved with
real estate
investments in China.
Oh, okay. Yeah.
They're very exposed. So if China's in trouble, a big chunk of their portfolios, maybe 20%.
Yeah.
Is at risk.
Well, okay. Well, I've been talking to Harold for a long time now, and he doesn't say these things lightly. It's not out there to scare you, so you could click on his interviews and have more followers. And really appreciate you sharing, what you share with other people that I'm sure are paying customers with our community, Harold. Really appreciate it.
One thing to take away from everybody regarding China is I think China is going to be the new Japan. I think they're going to have at least a couple of lost decades starting now. Okay. So forget about, China coming to the rescue. They're not going to be doing that.
Yeah, they may help drag us down, in fact.
Right.
The opposite. All right. Well, Harold Malgrim, follow Harold at Hal's Rethink on Twitter, and say hello to Nick, and appreciate your work and filling us in on a topic that no one's talking about, the shadow banking system. Harold Malgrim, everybody. My friend Harold Malgrim, filling us in. Thank you, buddy.
Nice to talk to you, Dale. Bye.
All right, Harold. So that's a wrap, everyone. So get ready for, some wild things to happen, and protect yourself. And an ounce of prevention is worth a pound of cure. You could join the team in 13 minutes on the Morning Edge. And don't just count your pips, count your blessings. Everyone's thanking you, Harold. Thank you very much again from all of us here in F.A.C.E. Adios.